Most traders lose forever until they quit, meaning 90% of traders never even make a single dollar from trading. They only give money away. But it's not for the reasons that you might think. And trading is actually easier than you are making it right now. And I'm going to show you how you can win at trading. Get rid of all the bad habits that you've created and actually start finding success. But first, we need to make sure that your mentality aligns with reality. So what we're going to do now is reshape your mind to set you up for success. Right now, chances are you're stuck losing consistently. You're giving away all your money to the markets and you're lost, confused, and hopeless. And the worst thing is, all of this is happening even though you feel like you're giving it your all. You've watched YouTube videos, you've bought courses, you've practiced, maybe you've backtested, you've been studying hard, but still nothing seems to work. You've put in the work, but nothing seems to bring you the results that you want. It's super frustrating, I know, because I was there for quite a long time myself before I kind of worked things out. But there is good news in line with this, and that is that it's not really your fault. See, the biggest reason that traders lose is going into trading with a broken perception. And this is an industry problem, not a you problem. It's not that you're stupid, it's just that the information that you've been fed is not really setting you up with the best odds of success. You watch videos like this of people flexing material wealth and telling you how they turned no money into massive amounts of money in no time at all. You watch videos of people driving around in supercars. You watch day in the life, lifestyle videos, and the educational videos that you watch generally aren't that valuable because they're just selling you a dream. And because of all of this, your entire perception of trading is destroyed from day one. You don't see trading for what it actually is, which is a long-term career. You see it as a cheat code to success. You're trying to hit fast wealth because the content you consume is curated to make you feel this way, to make you think like this. And all of your focus is put on the reward, on the outcome of successful trading, and not so much on the work that's actually required to get you there, which creates three big problems. The first is that you marry the outcome, not the inputs. So rather than looking at this logically, rather than approaching trading as a professional would, and rather than building out the systems and the processes and the strategies and the frameworks that you need to follow in order to actually consistently generate results, you're just thinking about what you're going to buy when you get funded. You're just thinking about how rich you're going to be when you hit that home run trade. And because of this, you're putting no attention into actually making it happen. You just jump on the charts every day, gamble away some money thinking you're doing the right thing, and then you end up the day or the week or the month with a loss again, and you can't see where you've gone wrong. A lot of people waste time on flipping accounts. You might be included here. So when you watch these made up videos of people turning $100 into $1 million, or people turning $20 into $50,000, you start to think that this is what trading is all about. You start to think that this is real and that people are doing this all the time. But the truth is, it's not. And if you lock in your focus on trying to turn your tiny $50 or $100 account into thousands, tens of thousands, or millions, well then you are simply going to blow up your accounts and lose all of your money over and over again. And ultimately, you don't actually know what it is that you need to do. Your trading is random. There is no method to the madness. You kind of just turn up, you think you've got your little strategy, you've got your little list of confluences, you throw them all together and hope the market spits out a trade. And if it doesn't, you'll find a trade anyway. This way of trading keeps you stuck forever. And it's why you end up in the cycle of doom, where you'll watch some videos and learn an approach to trading. You'll try it out for a week, maybe two, but as soon as you start to hit some losses, you will quickly give up on it. And then you go fishing for a new idea, and the cycle consistently repeats. It doesn't matter whether you've been trading for a couple of weeks or literally 10 years. If you're stuck in this cycle of doom, you will have made no progression in the right direction. By this point, you might have filled your mind with 100 different ways to approach the markets. You might know Wyckoff, Elliott wave, price action, indicator combos, yet none of it is actually making you profitable. Because when you trade this way, what happens is every time you start again, you hard reset your progress back to zero. Except this time it's worse because you've got conflicting ideas in your mind, which is going to make it harder to execute properly in the future. And when you trade in this way, where you learn something for a couple of weeks, try it out, and then if it doesn't immediately make you rich, you give up on it, you open a loop, you open a big problem. That trading success is not created by one trade. Success is created by following a routine, a system, a strategy consistently for the long term. And it's created by manufacturing what we call an edge, which is basically your statistical probability of making money long term in the markets. But with your current way of trading, none of this is possible. You don't have an edge. You haven't built one. You're just randomly firing bullets into the market and hoping something hits the target. You're completely lacking structure. There's no method to the madness in your trading. The majority of your trades are taken from gut feel, vibes, or randomness. There's nothing that tells you systematically whether you should be in this trade or not. Your focus in trading is to come to the markets today and make money today. You do whatever you can to try and squeeze some dollars out of the market, even though really that's not going to change your life in any meaningful way. There's no system, there's no strategy, there's no consistency, and there's no longevity to the way that you trade. It is a pure short-term focus. Because even if you win today, you can easily lose tomorrow, and you could lose 10 times more than you won today. And you have no clear way to get back to winning because your approach is random. Every system, every approach to trading can be good for a day, for a week, for a month. You can have streaks of luck, which make a system look perfect, which make you feel like your approach to trading is the key to becoming successful. But then as soon as you start to hit the losses, you spiral out of control. You feel like you've forgotten how to trade completely. Nothing makes sense anymore, and the hole just keeps getting deeper. It's why when you take a losing trade, you feel so hurt, because there's no way to get back from them. There's no way to contain the losses, minimize them, and then maximize the profits on the upside. You know, as soon as you start to hit losses, your money, whether it's profits or just your deposited funds, are going to be burnt to hell. One loss leads to a downward spiral that takes you all the way back down to zero or often further. And this is actually the problem with watching 20 different mentors on YouTube and trying to learn from every single different source. Because what you're actually doing is collecting fragments of information. It's like collecting 20 different pieces of 20 different maps and then trying to put them together. Information will conflict. You're going to get confused. You're going to get lost. And you're not actually going to give the time to build out something that works. So rather than making progress, all you're actually doing is layering confusion on top of confusion and making things more chaotic and harder for yourself. And I mean, this is amplified, especially by the fact that 90% of those so-called mentors aren't actually teaching anything real. They're just showing you supercars, watches, and piles of cash and diamond jewelry to try and sell you into that dream world. So ultimately, your trading has become a chaotic mess. But fortunately, the fix is easy. Now we've defined the problem, and it's not you. You're not stupid. It's not that you're not cut out for this, as you might have told yourself before. It's the perception that you've created around trading based on the content you've consumed. You're doing what 90% of retail traders do. You're trying to speedrun your way to success with improper processes, instead of doing things the right way. And I think deep down, when you take a step back to reflect, you realize that this is never going to work. I mean, think about it. Do you really think a professional trader comes to the markets every morning and spends 12 hours a day staring at charts, taking random trades with no system, no method, no routine? No, they don't do that, obviously. Do you think that professional traders take the trades that you've been taking? No, they don't. Do you think they have no organization, no strategy, and just take whatever feels right at the time? Obviously not. So if you want to win at trading, you need to eliminate the chaos and the noise and build clarity and consistency in the way that you operate. And when you see trading in the right way and you align your mentality with the reality, you will see that trading can actually be rather easy. That might sound crazy now, but you're going to see how this comes together. You'll see a much more simple way to make trading work, and you'll see how you can do this pretty quickly. Now, in order to break this down, we're going to go through 3 factors. 1, probabilities, number 2, profit targets, and number 3, time commitment. And as we go through these, you're going to see how what you're doing now is very different to what you should be doing. Now, trading is a game of probability. I want to start with a quote from Peter Lynch, a very famous and successful trader and investor, who said, "In this business, if you're good, you'll right 6 times out of 10. You're never going to be right 9 times out of 10. And you don't have to take this next lesson from me, because this guy made billions. So listen to him, not me. It's very true that in trading, we never know the outcome of any given trade. The next trade we take could win, but it could also lose. And it really doesn't matter how good the analysis is, a trade can still go bad. So if we were thinking logically about trading, we would build a system that would allow us to win money long term, even if we lose trades in the short term. Yet every time you lose a trade, everything completely derails. You see losses as the worst thing in the world, and you do everything you can to avoid them. One loss spirals you out of control and can destroy weeks or months or even years of progress in terms of money earned or profits accumulated in trading. You simply can't afford to take losses, because as soon as you do, you end up losing way more money than you should, and it will eat up all of the profits you take. And well, if you're trading in a game of probabilities and you can't afford to deal with losses and you don't have systems to set up with the very inevitable losses that are going to come, you're doomed. This whole approach is completely backwards. Now, this is my 2024 full year win rate, 60.71%. Okay, this is over all the trades I took in 2024, and out of every 10 trades I took, 4 of them lost. Yet this is my equity curve. I started the year with a losing trade, which pushed me into the red. But from there on, I was in profit permanently through to the end of the year. I'm losing almost half of all of the trades I take here, but the equity curve steadily goes up. And why does this happen? How can it be that I can lose almost half of my trades and still make a significant amount of money over the span of a year? Well, it's simply because I don't need to be right all the time. In fact, I don't care if I'm right in trading at all. All I care about is making money. So I built a system that skews the rewards in my favor and means that when I win a trade, I'm making more on that trade than I lose on a losing trade, which allows me to just simply play the probabilities and accept losses as the inevitable thing that they are. They're never going away, so we want to build a system that incorporates them. Now, the truth is, and you might not understand this right now, you can lose 5, 6, or even 7 trades out of 10 and still make significant money as a trader. And yeah, we don't want to lose 7 out of 10 trades, but we can, and it still works. It's still profitable. It's easier, it's less stress, and it's as close to a guarantee that we're going to make money as we can get. And knowing you can actually still make money when you're losing 7 out of 10 trades is great, because sometimes there are going to be hard times. Sometimes you are going to hit losing streaks, you might have a bad month, or even a bad quarter where things just don't go your way. But still, with the way that we set up risk to reward and the way that we balance the probabilities, we can still make money regardless of these hard times. So what you need to do is ditch what you do now, the random stabs at the market, the random risk amounts, and the random trades that you take, and instead create a system with positive asymmetric risk to reward. So this is going to be one of the big foundations to making you a profitable trader. So lock in for this bit, okay? Risk to reward is how much you risk versus how much you stand to gain. It's written out as a ratio. So in this example of 1 to 3 risk to reward, you're looking at risking $1 for a potential $3 return. The ratio would also be applicable to risking $100 to make a $300 return. A risk to reward ratio of 1 to 2 would be risking $1 to make 2 in return. A risk reward ratio of 1 to 10 would be risking $1 to make $10 in returns, okay? Now this 1 to 3 ratio is actually what I see as the perfect risk to reward ratio. We're going to get back to this very soon. Now, in terms of risk reward, if we think about an RR ratio of 1 to 2, this means we are risking $1 to make $2. Trading becomes a profitable coin flip, meaning you can literally just sit and flip the coin, knowing that every time it lands on heads, you lose $1. But if you flip the coin and it lands on tails, you make $2. Well, if this coin existed in real life, you would endlessly flip this coin as much as possible in the confines of, obviously, a system. And the thing is, in trading, we can create this coin. We can make a coin where we only lose $1 on heads and we make $2 on tails. So let's take a look at an example now. 100 trades with a 1 to 2 risk to reward ratio. Let's assume a 50% win rate. So you lose 50 of the 100 trades, you lose $100 per trade. You win 50 of the 100 trades, and on those you win $200 per trade. Well, after your 50 losses, you're going to be down $5,000. And after your 50 wins, you're going to be up $10,000, which creates a total net profit of $5,000 after your 100 trades are complete. So even though you're wrong half the time, you are consistently making money. Now, in order for this to work, we need to set a risk per trade to work with on every trade. Your risk should always stay the same. Now, obviously, as we just discussed, if you're taking a trade and you are risking $100 to make $200 plus, that's all good, as long as you keep consistently doing that. However, if you randomize your risk, so let's say you risk $100 on this trade, but the next trade you risk $200, well, if your $100 trade wins, you've made $200 in returns with the 1 to 2. But if your $200 trade loses, now you're back to even. And obviously this can dig you into a pretty big hole pretty quickly. So I think 1% risk per trade is great. It's a great margin to work towards. So if you're trading with $1,000, you risk $10 per trade. If you're trading with $200,000, you risk $2,000 per trade. And when you do this, your risk is fixed. You know what your outcome is going to be if a trade loses. And then you can skew it with the risk reward edge that we've discussed so far, get that positive asymmetric risk reward, and that will make you profitable over the long term, providing you can do 1 to 2, 1 to 3 or more. Now, the perfect risk reward ratio, in my opinion, is 1 to 3, which means you're looking to win 3 times more on winning trades than you lose on a losing position. So here we're looking at the performance over 10 trades with a 50% win rate, meaning both of these traders are losing half the trades they take. The 3R trader, the blue line, is someone who is making 3 times more on winning trades than they lose on their losing trades. The 1R trader is someone who makes $100 for every $100 risk. And you can clearly see, with a 50% win rate, if you're risking $100 to make $100, you are going to end with a 0% return. You're just going to float around at break even endlessly with no real odds of ever making money consistently without pure luck. And we do not want to base our futures on luck. But you can see that the 3R trader is actually up to 10%. They're making an average of 1% per trade. And that includes the losses, right? They win 3% on a winning position, they lose 1% on a losing position. So if they took 100 trades, they would average out at around 100% return. Obviously, trading is not going to be completely linear, but if you can keep up this 50% win rate long term, but when you keep up around a 50% win rate and you trade with this positive risk reward, you set yourself up for pretty much ensured success. And now let's make things even more interesting. This graph shows the traders with a 33% win rate. So they're actually losing almost 7 out of 10 trades. Now the 3R trader, despite being wrong almost 7 out of 10 times, is actually up 6% after 10 trades. So the profit is smaller than it was with a 50% win rate, but they are still moving in the right direction. The equity curve is going up, and if they continue to trade this way forever, even while losing 7 out of 10 trades, they are still going to be profitable. But now if we turn our attention to the 1R trader, you can see they are consistently moving to the downside, and no matter what they do at this point, and they will only lose money and never win. So what can you take from this? What can you see from this? Well, when we think about it, we pretty much just fixed your trading in theory. Now you know you don't have to worry about losses. And what you need to do is focus on accepting losses as an inevitability, because that's what they are. And you need to build a positive asymmetric risk reward system that will allow you to make money even when you're wrong. I've just given you a near enough guaranteed way to win, even if you are wrong 70% of the time. You can be a really bad technical trader and still make money when you follow these principles. Information is one thing, but we need practicality. We need something we can apply, some technical concepts that will get us there. And don't worry, we are going to be building a trading system together very soon. But first, we need to continue to line your mind up with reality. So the key takeaway from this probability section is that you need to stop gambling, stop guessing, lock in with a set risk per trade. I recommend 1%, I think that's a good baseline. And focus on working towards achieving consistent 1 to 3 risk reward ratios, making $3 for every $1 that you risk. This foundation will save you from a lot of stress, frustration, and of course, lost money. And it will pretty much be the first step towards achieving consistency in your trading. So with probabilities out the way, let's talk about a big one, profit targets. I want to start this by asking you a big question. In your trading right now, and through everything you've learned, what do you think is a meaningful profit target? What do you think is a consistently achievable monthly return? What is it you're looking to make each day, week, or month from trading? 20% per month? 10% per month? 5% per week? 1% per day? These are all pretty common profit targets I hear from beginner and amateur traders. But the truth is, you don't need to hit anywhere near these returns. Now that might sound crazy, because you might think, based on the content you've watched and consumed, that 20% per month is a very realistic, achievable profit target. But it's not. If you look back at the trading greats, read through the Market Wizards books, check out interviews and articles from the biggest traders in history, no one hits these returns consistently over the long term. It's just not doable. If it was, everyone that traded would be a trillionaire. The profit targets that you actually should be looking to achieve are much smaller than you might expect, and we'll break them down in a moment. But first, let me tell you why you shouldn't even try to push for these 20% per month consistent results. Now, I'm not saying you can't hit 20% on some months, because I've had very big months myself. I've hit 40% in a month before, but it is not going to happen consistently. And it is not going to happen every single week, every single day, or every single month. And when you push for these big profit targets, you create problems, because what you do is you overtrade, you over risk, you take positions that aren't really there, and you end up giving back all of the returns that you have made, pushing for more. There simply aren't enough opportunities that are A+ and perfect in the market for you to consistently hit these returns. And there's too much unpredictability in that game of probabilities. You never know. A piece of headline news could come out and kill your trade, even if the analysis was perfect. And when you're pushing for these massive targets, you're actually risking the real money that you've made, that you should be happy with. You end up giving it away and ending the week, the month, or whatever, unprofitable, because all of the returns you did make got thrown away being greedy, looking for more. Now, as you're about to see, you can actually make massive dollar returns, so massive income, with what you might see as tiny percentage profits. But the percentage returns I'm about to show you are actually great, and they're achieved by great traders. They may have been undermined by online gurus that you've watched who are telling you they make 1,000,000,000% or 10,000% a year or whatever, but I promise they don't do that. And the big point I'm going to make here is when I show you what you need to make per month in average returns. The great news here is it's actually doable. It's consistently achievable, which means rather than making some money and then giving it all away, you can make a little bit, make a little bit more, make a little bit more, and continually do that gradually throughout the year until you end the year with a very, very healthy return on your capital. All of this completely unlike the massive profit targets that you're pushing yourself for right now. So when you push for these big profit targets, you end up giving back profits from good trades by taking bad trades, pushing for more. And you spend way too much time on the charts as well, getting burnt out fishing for opportunity. It's why you spend 12 hours of your day staring at the charts and give up pretty much everything else in your life and become addicted to trading. So big targets are actually rather counterproductive. How much do you actually need to make then from trading? Well, this is going to shock a few of you. But the returns that you need to look for are between 2 to 5% as an average monthly return. If you've been sold on this idea that you can make 1% per day or 20% per month or more consistently, you might be thinking, what am I going to do with 2 to 5% per month? But this is actually almost triple what any safe passive investment is going to get you per year. And it's enough to open the doors to massive 5 or 6 figure incomes for yourself from your trading. So let's run the math on 2 to 5% per month profits. Well, on a $100 account, I can see why this is incredibly underwhelming. You'd make between $2 and $5 per month, which at that point is pretty much not worth trading. But if you had a $100,000 account to work with, this would be between $2,000 to $5,000 per month. Double that up to $200K and that is $4,000 to $10,000 per month. And if you push it even further to $400,000, this is $8,000 to $20,000 in monthly average returns. And look, you might be wondering, how am I meant to get $100,000? Or $200,000 or $400,000 for that matter? I know this is a massive amount of money. And I'm not expecting you to save this money yourself, because if that was the case, none of us would have made it in trading because it's such a large amount of money that's needed to make good returns. But today we have prop firms, which are companies that will give you money to trade with if you can prove your skills. And then you will keep a portion of the profits that you make using those accounts. Pretty much how it works is just like this. You get a evaluation account. You start at $0. You have to make a 10% return without losing 10%. And if you do that, you will get access to $100,000, $200,000, even up to $1 million in capital, way easier than you probably thought right now. And these accounts are very affordable. You can get a $10,000 funded account for around $50 actually, and a $100,000 funded account evaluation for as little as $400. Now you do obviously then have to pass the evaluation, so you need a profitable strategy, but we're going to be building that out together, so don't worry. The point is, when you have this skill, the money will come as a byproduct. It's easy to get nowadays if you have the skills to trade successfully. It's more accessible now than it ever has been before. Just to show you this is actually real, these are some payouts from students who I've taught using these funded accounts. That's all money that's been given to them by the funding companies as profits for the trading that they've done. Now, really quick, let me show you the power of 2 to 5% per month returns on average, using my results from 2024 as the baseline. So we looked at this equity curve before, which was the results that I got in 2024. Along with that, I achieved a 39.46% return over the year, and that was with a 60.71% win rate, okay? Now, month by month, this is what the profit looked like. As I said, some months are very big. In April and in January, we did 11%. However, the rest of the months baseline around 2 to 4% in regular profits, okay? We had a 1 month under 2%, one at 2%, one just above, and the remainder between 3 to 4% in profits, except for another one in June, which was 6%. And then in May, I didn't really find no trades. July was a losing month, which by the way is very normal. You are going to have flat months, you are going to have losing months, which is another reason why you need to prepare your trading in this risk-reward weighted way. Now, looking at these results, this is achievable, right? You could do 2, 3, 4, 5% per month pretty easily, I would imagine, even with the information you've got now, if it was structured correctly. Now, this performance on a $200,000 funded account equates to $94,375 in profits. You'd probably pay 10 to 20% of that in valuation fees if you were doing this with funded accounts, which means you'll probably take home around $7,000 per month when we average it out. Obviously, some months very big, but the majority of months sitting around that $7,000 mark. Would you not be happy with $7,000 a month from trading if it was a simplified way to do things and it was a lot easier, lower stress, and took barely any time compared to what you're doing now? This would be a massive step up, right? Because this number is achievable for you if you follow the process that we are building out together. And now look, $94,000 per year on a $200,000 funded account, very good stuff. It's not private jet money. It's not quite Lambo money yet. Yes, you could buy yourself a nice watch. Yes, you could go on some holidays. Yes, you would be, to a degree, financially free. You would make more doing this than you would from your job. But you're not going to be living the high life off of these numbers. But let's think about it this way, right? If you come back to reality, are you living the high life off of your trading performance now? Are you flying in private jets off of your trading performance now? No, you're not, right? This is an excellent first step. If you can push close to $10,000 per month, you are living a good life. And it is so accessible to do if you follow this funding format, right? So even if it's not where you want to get to eventually, you're never going to get there immediately anyway. You need a good step in. You need to get your foot in the door. You need a way to build consistency, and this is the way. Small, consistent, compounded returns. And the big key thing here is this is actually attainable for you. You can do this. If you dial back how much you are forcing yourself to try and make, you're going to eliminate that massive problem where you make money and give it all back. If you focus in on smaller, more consistent returns, you will be able to make smaller, consistent returns. It's something that you can do. You can build success this way, and it's a lot more effective than what you're trying to do and failing to do now. And look, it might feel weird going for small profit targets. Surely aiming for more is the right thing to do, right? Well, we've kind of debunked that, and I've showed you that this small, consistent approach is going to be much more effective and more productive towards your success than pushing for big returns. Yes, it is good to hit big returns. Yes, sometimes they will come naturally when the market is printing great opportunities, but no, you shouldn't push it. You shouldn't force yourself to try and get massive returns all of the time, because as you've seen, it leads to big mistakes and problems. This small and consistent return approach is attainable, achievable, consistent, and low stress. And it also means you lock in profits as opposed to giving them all back, which will allow you to take back your time, kill your short-term mindset, and create peace and calm in your trading. And I mean, really, do you think you couldn't make 2 to 5% per month? Because I think you can. I mean, you've probably got the information to do so in your mind right now. You probably have hit 2% trades before, 5% trades before. Well, obviously those trades alone, outside of the realms of a system and structure, it's not going to work too well. But if you can get the information you already have and build this into a step-by-step approach to the markets, well, then it will work for you. You probably have the skills to do those profits right now. You just need to structure it in a way that allows you to do so consistently. So when you go for attainable returns, trading gets a lot easier and a lot more profitable as well. Key factor here in building this second foundation, step back from trying to get crazy profits all the time and focus on long-term consistency over your short-term home run trades that you're pushing for all of the time now. You don't have to make money every day. You don't have to hit a massive win today. You just need to consistently bring these nice small returns, and it will compound into more money than you could imagine. And we use that probability risk-reward skew that we discussed earlier to make this happen. Time commitment. So I can almost guarantee that you spend too much time trading right now. Chances are right now you are spending no less than 6 hours per day in the markets. You're probably spending way more. When I was in my early days of trading, I would literally wake up, trade all day, go to sleep, wake up, trade. That was it. It's all I ever did. And it's probably what you're doing now, or at least close to. Maybe you watch some videos in between, but you are always married to the markets. The problem here is that in trading, we are paid based on the quality of our decisions. We are not paid on the amount of time we spend staring at the charts. It's weird when you come from a job environment where you get paid for your time, but trading is not like this. And actually, it's not good to spend too much time on the charts, because guess what happens when you spend all of your time in the markets? You start seeing trades that aren't there. You start getting bored and you gamble money away. You hyperfixate on trading, overrule every area of your life, and get lost in the chaos, which leads to blown accounts, big losses, bad mental health, collapsing relationships, and trouble at work if you're spending all your time trading. Ultimately, giving trading a giant time commitment and spending all day every day on the charts is a massive net negative for your life. And also for your ability to make money trading. Because when you are so burnt out and so lost and your judgment is so clouded, your decisions are going to be bad. And when your decisions are bad, that is when you lose. Professional traders don't operate this way. They have systems, routines, schedules, time blocks that they work within. And good trading doesn't need to take all day. In fact, it never does. Good trading actually takes no longer than 30 to 60 minutes per day of well predefined work. Because really all you have to do is analyze the markets for the day. And then you just set alerts, set orders, wait for those trades to trigger, and then manage them when it's needed. It really doesn't take a lot of time to trade well. And when you only run over the charts for 30 to 60 minutes per day, you build a real idea, a real clear idea of what the markets are doing, and then you step away before you start getting lost in the noise and lost in the chop of the low timeframes, because this is usually what happens. You build a good picture of the markets, and then instead of just trading that, you start digging deeper. You start looking at more pairs. You start messing around with everything. You spot things that you think are a problem and they're not. And this is where things derail. So a small 30 to 60 minute time block per day is actually pretty much all you need. A quote I love on this topic from Charlie Munger, which is one of the most successful investors in the world. The big money is not in the buying or selling, but in the waiting. And I know the context is slightly different because we are actively trading as opposed to investing for the long term. But you would be surprised how short people's attention spans are when they get into trades. I'm sure actually you probably know. You get in a position, you know it's probably going to take a day to run through, but every 5 minutes or every 1 minute, you're staring back at it, you're unlocking your phone, you're checking the profit and loss. You cannot keep yourself away. This is the problem. This is where you start to step in and ruin a good trade. The money is made in the waiting, not in the actual buying and selling that you do, not in the messing around with trades. Just get in and let it go. That is the way to trade well. So cutting back the amount of time you spend actively trading and staring at charts will be one of the most impactful things that you do for your trading. And now we've covered all three of these pillars: probabilities, profit targets, and time commitment. And hopefully by this point you've seen you don't have to be right all the time. You don't have to make massive profit percentages all of the time, and you don't need to spend your whole life glued to the charts. You can find success in a much easier, more clear-cut, and less demanding way. Work smart, not hard. It really works. And with your new perception, the one that you've crafted through today's lesson so far, you've laid the foundations for a more enjoyable, lower stress, and much more profitable future in trading. The mental groundwork is done, and hopefully now you see where you've been going wrong. It's not really a you problem. It's more an industry problem and the things you've been fed, which have created this bad mindset and mentality around trading, which is leading you to go through this losing cycle. And look, we've only talked about perception, mindset, mental reframing. And I don't expect you to now magically win just because I've told you what it is you need to do. A class on psychology like this one is obviously not enough. To have a chance at success, we need that system that I've continually talked about actually to be built out for you to operate with. So now let's take a look at systemization, talk about what this is and how this works. Now, right now in your trading, I would guess that the majority of your trades look somewhat different. You mix and match different concepts that you've learned on YouTube or through courses, and you change strategy all the time when things don't go your way. You probably fit at least one of these. That leads to a progress path that looks like this. You start moving in the right direction. You try out a new system, a new approach, a new technical way to trade. And to begin with, it seems okay. But as soon as you hit some losses, you give up on the system. You switch and it kills all of your progress up to this point. It's like hard resetting to zero every single time. But when you lock in on one single approach, a repeatable system that you can refine and improve over time, your progress path looks like this, where you create exponential growth potential and endlessly scale up. And to explain what a system actually is, it's a collation of your technical, risk, and all other elements of trading, built into a rules-based approach. A step-by-step routine that you will follow each time you come to the markets to analyze, execute, and manage trades. We want to turn trading into a simple, applicable process, and we need to move you to a rules-based system. So what is a rules-based system? Well, it looks a little like this. You come to the markets and analyze. You look for your setup. If you don't see your setup, you simply do not trade. If you do see that your setup is present, you check some other criteria, such as the time of day. Does this fit within your rules? Is there any high impact news coming up? If these criteria are not met, then you don't take a trade. But if they are, well then you take the position. And this way of trading ensures that you only take A+ setups, the best of the best trades, which eliminates a lot of the mistake trades and the trades that cause you to give all of your profits and all of the rest of your money back to the markets. Everything that is bad is cut before it even has a chance of taking your money. So we systemize the risk elements, we systemize the technical process, and we pretty much turn it into a simple working machine that is proven to print money over time. And that's what we're going to do next. We're going to take the little fragments of knowledge that you've collected over your trading journey and build them into a system that can be continually repeated that is proven to create results for you. In the next class, coming in just a few days, we are going to build a system together, backtest it to validate the results, take a look at the performance in the back end, and show you how to build your own system, including all of the elements that you need to include, so that you can get funded and start making real money from trading. The next video drops on the 23rd of July. Be there. This is the next big step towards taking you into profitable trading. So put notifications on my YouTube channel, and more importantly, hit the link at the top of the description to join my email list. I'm going to be sending extra lessons between here and the 23rd. Every day you will get a new lesson which builds upon the points we've covered today and takes you closer to your success. Together, we are going to make you a winner and put an end to this horrible cycle of doom that you've been stuck in since you started trading. You can do this, and I'll make sure that it happens. So with that said, that's all for today. Join the email list for those extra lessons, and I'll see you on the 23rd.